Was there anything from this Asian trip by the U.S. president that's made you change your forecasts or projections, or at least rethink some of these assumptions?
The simple answer would be no. It's good news that nothing bad happened, and there was always a risk of that in terms of geopolitical risk escalation. The trip on both sides seems something that both parties, China, U.S., and local countries in Asia, can be relatively happy about. So no, we don't see the outcomes from these meetings in Asia from President Trump's trip in terms of changing the macro outlook for local markets.
And I'm guessing that then points us in the direction of what? Is it data that you're looking at? I mean, we have inflation out later out of the UK. We have inflation out midweek out of the United States. I mean, there's a debate that's sort of re-emerged this week. I'm not sure if that's a function because the data is just coming out, that it doesn't matter what the data looks like for the Fed, that they will hike no matter what. Is that what you think?
It's likely that the Fed will hike in December, but I think in terms of the outlook, three things really matter. First, the extent to which the global economy can continue to recover. And on that, the signs generally look favorable. The Chinese economy has surprised people by performing better this year. The US and Europe, generally you're having a coordinated recovery across the world, so that looks like good news. The second thing that matters is the path of oil prices, and oil prices have risen above most people's expectations for what would be the trading range for this year. Higher oil prices can be bad for Asian currencies because most countries are importers. It can also skew the risks for interest rates to the upward direction as well. And the third thing that matters is really the path of the long end of global interest rates.